On May 1st, 2026, the United Arab Emirates shocked the world by announcing its exit from OPEC and OPEC+. The news reverberated across continents, catching even seasoned analysts off guard. For decades, the UAE had been a steadfast member of the world's most powerful oil alliance, shaping the global energy landscape from behind closed doors. This wasn't a quiet departure, it was a declaration that the old oil order was over. The UAE's leaders made it clear they were charting a new course, one that would prioritize their own interests and ambitions over the collective decisions of the cartel. The UAE, a top global oil producer, had been a pillar of OPEC for decades. Its vast reserves and advanced infrastructure made it a key player in setting oil prices and ensuring market stability. Its exit, amid a global energy crisis triggered by war with Iran and the closure of the Strait of Hormuz, sent shockwaves through markets and governments worldwide. Oil prices spiked overnight, and uncertainty gripped financial centers from New York to Tokyo. For years, OPEC acted as a cartel, managing oil supply and prices. The organization's decisions could sway economies, influence geopolitics, and even spark conflict. The UAE's membership was central to that power. Its voice carried weight in negotiations, and its cooperation was essential for OPEC's unity. Now, with the UAE gone, the foundation of OPEC is fundamentally shaken. The alliance faces an uncertain future, with cracks appearing in its once solid front. The move signals a shift from collective control to national ambition and a new era of energy competition. Countries are now more likely to pursue their own strategies, leading to unpredictable alliances and rivalries. The UAE's leaders have been rapidly diversifying their economy, clashing with OPEC's oil-centric approach. Investments in technology, tourism, and renewable energy have transformed the nation into a regional powerhouse, less dependent on oil than ever before. The era of a single group controlling global oil is ending, opening the door to volatility and new possibilities. As traditional alliances unravel, new players and technologies are poised to reshape the energy map. The UAE's bold move marks the start of a radical transformation in the global energy landscape. As the world watches, the question remains, who will lead in this new era, and what will the future of energy look like? The UAE's exit from OPEC was years in the making, driven by diverging interests. With a diversified economy and massive global investments, the UAE benefits more from stable growth than high oil prices. OPEC's production quotas became a ceiling, limiting the UAE's ambitions and frustrating its leaders. Tensions with Russia, especially after Moscow's support for Iran during the recent war, made continued cooperation impossible. The trust that once held OPEC+ together had evaporated. The UAE saw the cartel as outdated, no longer serving its vision as a global hub for finance, trade, and technology. Leaving OPEC was a declaration of independence and a bet on a future beyond oil. The UAE's frustration with OPEC's quotas was a key reason for its exit. Billions invested in oil infrastructure sat idle, as quotas kept production artificially low. After the Iran war, the UAE needed revenue to rebuild and diversify. By leaving OPEC, it can now ramp up output, capture market share, and strengthen ties with major consumers like China and India. This isn't just about selling oil, it's about building strategic alliances and gaining geopolitical leverage. The UAE is betting that oil will remain vital for decades and aims to outcompete less efficient producers. It's trading cartel price support for production dominance and long-term influence. The move is a bold strategy for a new era. The UAE's dramatic exit from OPEC is rooted in a web of deepening Middle East rivalries and shifting alliances. This move signals not just an economic decision, but a profound geopolitical shift that is reshaping the region's power dynamics. Once close allies, the UAE and Saudi Arabia are now open competitors, their partnership fraying as they pursue divergent interests. Recent clashes in Yemen have exposed the growing rift, with both nations backing rival factions and seeking influence over the war-torn country's future. Saudi Arabia's dominance in OPEC became a major point of contention. The UAE, with its own ambitions, refused to play the role of junior partner, pushing back against Riyadh's control over oil policy and production quotas. Disagreements over quotas and production levels masked even deeper geopolitical disputes, as both countries sought to assert their influence on the global stage. The ongoing Iran war, coupled with Russia's unwavering support for Tehran, shattered any remaining trust within OPEC+. These external pressures only heightened the sense of instability and suspicion among member states. The UAE realized it could no longer rely on the cartel for either security or stability. The old guarantees of mutual support had faded, leaving Abu Dhabi to chart its own course. The U.S. naval blockade of Iran underscored the volatility of the region's vital energy routes, threatening the free flow of oil and raising the stakes for all Gulf states. For the UAE, strategic independence became not just desirable, but essential for its survival and prosperity in an increasingly unpredictable environment. Leaving OPEC was as much about national security and asserting sovereignty as it was about economic opportunity. The UAE's bold move marks a new chapter in the region's evolving balance of power. The UAE's departure is a turning point for OPEC and global energy markets. OPEC's power relied on collective action. Losing the UAE is a severe blow. Oil prices may become more volatile, with less market stability and more unpredictable swings. The world's buffer against supply shocks is now fragmented, as the UAE acts independently. OPEC's long-term viability is in question. Other members may follow the UAE's lead. The future may be shaped by a handful of major producers competing for influence. The era of OPEC's dominance is ending, replaced by a more chaotic and competitive market. The global energy system is entering uncharted territory. The UAE's split leaves Saudi Arabia exposed and burdened. As OPEC's leader, Saudi Arabia must now shoulder even more responsibility for market stability. The rivalry with the UAE is now public, with both nations competing for economic and political dominance. The UAE's exit challenges Saudi Arabia's leadership and forces it to choose between ceding market share or risking a price war. This strains Saudi finances and complicates its Vision 2030 economic reforms. OPEC is no longer a reliable tool for Saudi influence. The kingdom must adapt to a new reality, managing the oil market without its most important partner. The crown of oil leadership has never been heavier. For Washington, the fracturing of OPEC+ is a strategic win. The UAE's exit weakens the Russia-Saudi axis and reduces the cartel's ability to manipulate prices. The US now has another major friendly producer to help stabilize markets. This gives America more leverage and flexibility, especially in refilling its strategic petroleum reserve. Lower prices and a more competitive market align with US interests. Russia and Iran lose influence, while the US gains new options in the Gulf. The UAE's move creates a new geopolitical dynamic, offering Washington more partners and control. The balance of power in global energy has shifted. The UAE's exit resets the global energy chessboard. The new era is defined by four major players: the US, Saudi Arabia, Russia, and an independent UAE. Alliances are now fluid, with each power pursuing its own interests. China, as the world's top oil importer, will play producers against each other for the best deals. Smaller producers must choose between sticking with a weakened OPEC or forging their own paths. The focus shifts from price management to efficiency, reliability, and strategic partnerships. The UAE's high-tech, high-volume model is the opening move in this new game. The choices made now will shape the future of energy and global power. The UAE's departure from OPEC is a landmark event, signaling a new era in global energy. For decades, OPEC has been the world's most influential oil cartel, shaping prices and production. Now, with the UAE stepping away, the balance of power is shifting, and the rules of the game are being rewritten. Years of diverging interests and mounting tensions made this split inevitable. Behind closed doors, disagreements over quotas and strategy have simmered, with the UAE pushing for greater autonomy and flexibility. The UAE's focus on independence and market share breaks with the past and sets a new course. By prioritizing its own economic ambitions, the country is betting on innovation, investment, and a more agile approach to global markets. OPEC's ability to manage prices is critically wounded, leaving Saudi Arabia isolated. The once unified front is now fractured, and the organization's influence over the oil market is in question. The US gains a new partner, while Russia and Iran lose influence. This realignment could reshape alliances as countries scramble to secure their interests in a rapidly changing landscape. For consumers, more supply may mean lower prices, but also more volatility and risk. The market could see sharper swings, with uncertainty becoming the new normal for both producers and buyers. The world of oil is now defined by competition, not collusion. Companies and nations will race to adapt, innovate, and outmaneuver each other in pursuit of profit and security. The UAE has made a bold move for power. How others respond will shape the future. Every decision from here on will ripple across economies, politics, and the daily lives of billions. The story of oil and global power has entered a new chapter. As the world watches, the consequences of this seismic shift are only beginning to unfold.